Okay, so this is a short presentation on tax equivalent yield. Looking at tax equivalent yield is an important concept if you are an investor or considering an investment in the Dual City Advantage Fund. First of all, as an investor in the Dual City Advantage Fund, there are tax advantages associated with the distributions that we pay. These advantages are not associated with many other investment opportunities out there to you as an investor. And thus, we use the concept of tax equivalent yield to discuss this comparability between our distributions and those you may receive from other investments out there. Again, as an investor in our fund, you become a limited partner, which means that you receive distributions from the fund. Our cadence of distributions is quarterly. Those distributions are classified as returns of capital. Returns of capital are not taxable until a partner's entire capital account balance is exhausted. That said, the fund has a track record of producing positive net income, which replenishes the capital account of the fund's partners. This is why we introduced the dynamic of tax equivalent yield to compare our distributions to those from other investment opportunities that are fully taxable at ordinary rates. Of course, everybody's own tax rate varies by their income level and the state of residency. So it's important that you take a look at your own tax rate and, if necessary, consult with your tax advisor to determine what rate makes sense for comparability. Before I dive into this example I have on the next page, I want to show you just a small clip from one of our investors in the Dual City Advantage Fund from their K1 last year in 2023. Here you'll see the beginning capital account, the net income from the fund, their percentage ownership of the fund, distributions received, and then the ending capital account. Because the fund's dynamic is to replenish the capital account through net income and then reduce it through quarterly distributions, we believe this sets up visibility to quarterly distributions continuing to be returns of capital. So here in this illustration, I want you to just take a look at the purple box. In here, let's assume an investor in our fund is in the highest federal tax bracket of 37% and lives in a state that assesses at 4% state tax, which may be above or below yours. But for this illustration, let's assume a 41% total tax on income. In 2023, our fund produced an average quarterly distribution of about 6.4%. So for this investor who has a 41% total tax rate, the tax equivalent yield from investing in the Dual City Advantage Fund in 2023 was 10.8%. And you'll see the very basic arithmetic there. To wrap this up, I wanted to show a slide that shows the historical tax equivalent yield calculations using various state tax rates. Again, this assumes a federal tax rate of 37%. So we're taking 37% and then adding on your state income tax rate. You can also see in this graph, obviously, the reported distribution levels in the bottom blue line. From there, you can see if you live in a zero income state tax like Texas or Florida, you have earned an average distribution tax equivalent yield of 9.8%. Of course, if you live in higher tax states such as New York or California, the average tax equivalent yield from our fund since inception is in the low double digits, around 12%. Please note that this chart is for illustrative purposes only. And again, please consult with your tax advisor to discuss any specific tax strategies or individual tax rates. Of course, if you have any questions on the Dual City Advantage Fund, our distribution history, our management of our properties, or anything else related to the company, we invite you to please reach out to us via email or phone call. Thank you again for your interest in Dual City.